Good evening, this is Ryan Mallory for SharePlanner.com. Today is November 4th, 2010. Great day for the Bulls as we finally managed to break out from a consolidation period that has lasted for more than 2 weeks. We slightly broke above it yesterday, but today was definitely the follow-through. We tested those April highs that we've been eyeballing for quite some time that we eventually thought would be tested. When that occurred, though, we basically closed right on top of it. We basically 1 point above the April highs, which is good. I mean, it's very good for the Bulls to have done that, and it shows that there's some momentum in this market to still go much higher. However, when you look at this action today and you compare it against past history, and I beat this to death in the live chart session this morning, so you can get a lot of that if you just go back and listen to that video. But I'll go ahead and anyways just put the Bollinger Band up there for it. But when you see it, I mean, that's about more than 80% of the candle body outside and above the upper Bollinger Band, and that is not the best place for you to be adding new positions into your portfolio. And if you look back throughout the course of time, when we've broken through the upper Bollinger Band, we have seen some selling in the days ahead. I'm not talking about like 2008 selling where we start dropping 5 and 6% in a day. I'm talking about we need to work off this overbought nature in this market, and really, I mean, most of that comes from just today's trading. I mean, we are way outside of that elastic range of where you like to slowly see progress to the upside. So I think that you could see something like of a bull flag form in the next day or two. And basically what I did, I closed out of most of my positions today. SanDisk, I took profits in. I took profits in Amazon, profits in GHL, profits in Jack. Wish I still was holding on the gold yesterday, but the thing stopped me out for a small profit yesterday with all the turmoil surrounding the Fed. But overall, though, what I did is I went long on MCD McDonald's. I put about 10% of my portfolio on McDonald's. I kept my Netflix and TICC position, which accounts for about 13% of my portfolio. So I'm about 23% long between those three stocks. And then I bought QID, which is an ultra short, which benefits off of the market going down to 2 times the inverse of the NASDAQ. So I put a 16.5% position in that. So net, when you factor in the fact that I bought an ultra short, I'm trying to be about 10% short in this market. And what I'll do is any kind of intraday weakness that we see, if we drop, somewhere between 5 and 10 points, I'll book profits in QID, no questions asked. I think the worst case scenario for me is that we see a market continue to rally higher tomorrow that might go as high as 3 or 4 points. I don't see it going much beyond that. I think even your most novice traders are going to be a little bit tentative of buying at the highs right now. I think to the downside, you will see probably no more than, I could see the market giving about 5 to 10 points back, just enough to get the bulls feeling a little bit uneasy. And what I'll do is hopefully by then I'll still be in my long positions, and at that point I will start taking my QID position off and start adding new long positions for the next leg up in the market. I definitely think we go longer. I don't think in the very near term, meaning like Friday, Monday, and Tuesday, we're going to see a lot of upward momentum coming out of that market. Sometime mid next week, I think you could see the market get a little bit more initiative to it. I want to show you another chart too, and this comes off of Thinkorswim, and here we go. Basically here I drew a few things here. You have a McClellan oscillator right here, and you also have the Fisher oscillator as well right here. And here I put the acceleration bands, which we far and above went outside of today. And here's the person's pivots using options expiration. And in the past, when we have hit that, for instance, like right here, and come close to hitting it right here, we have actually sold off. Not too many times do we go above this line right here, and as a result, that was another reason for me to take gains. I mean, we closed right on that level, and I'm not going to hesitate to book most of the gains that I made today. Like I said, the only positions I have left is NFLX and TICC. I added MCD, but I basically offset all of that with a large QID position. So, but let's uh, not get too excited about today's market rally. Great for the bulls, but you want to wait for a better entry. A lot of these stocks are overextended. You look at the action that we saw in SanDisk today. There was a lot of stocks that went through the roof. So don't worry about missing the train. I don't think you're going to. And if it does, then you'll just have to wait for another trading day to excuse me, to get back into this market. But at this point here, getting in on the market when it's that far above the Bollinger Band is not the best way to manage risk in your portfolio. The risk is much more against you, and the profit in the very near term is very small. So be aware of that, and we'll take on this market again tomorrow.